Hello everyone, I'm going to go over some sample questions for chapter 2. In these questions you are given a balance sheet and an income statement, okay, for the year 2004 and 2005. Income statement is for the year 2005. Now first question, what is the amount of current assets in 2005? So very simple, current assets equal to cash plus account receivable plus inventory, so which is 1300 plus 3600 plus inventory 5100, okay, and it is equal to $10,000, okay. Now second question, what is the amount of net working capital for 2005? So we know that net working capital is equal to current assets minus current liability. Current assets in 2005, which is equal to we calculated in the first question $10,000 minus current liability in 2005, which is account payable 2100 and equal to 7900, okay. What is the total amount of stockholders equity for 2005? Stockholders equity, which is the common stock and retained earnings, okay. So stockholder equity would be equal to common stock plus retained earnings, okay. So in 2005 common stock is equal to 9,000 and retained earnings equal to 4,400, okay. So equal to 9,000 plus 4,400 and equal to 13,400, okay. What is the amount of non-cash expense? Non-cash expense, we know that it is depreciation, and depreciation is given as 1600, okay. So obviously the answer is A. What is the amount of dividend paid this year? Okay, so how do you know how much the company pay dividends? Now if you look at this, if you know net income, okay, usually net income, the company use net income to pay dividends, and the remaining of net income, which is not which is not which doesn't go to dividend, will go to retained earnings account, okay. When we add additions, okay, when we addition to retained earnings. Now, so how much is the addition to retained earnings? So you can see that at the beginning of the year, okay, retained earnings at the beginning of the year is 2,900. At the end of the year it is 4,400. So during the year the company added an amount equal to 4,400 minus 2,900 and equal to 1,500, okay. $1,500 was added to retained earnings. So what it means is the dividend the company paid during the year would be equal to 6375 minus 1,500, and this is equal to 48 equal to 4875, okay. 4875, okay. So 4875 is the amount of dividends the company paid during the year. So the answer is B right here. Number 6, what is the amount of cash flow from operation? So OCF, okay, equal to earning before interest and tax plus depreciation minus taxes, okay. EBIT, it is given at the beginning equal to 7,900, okay. EBIT equal to 7,900 plus depreciation, which is equal to 1,600, minus taxes, how much taxes the company pay. You can see it is 1125. Okay, minus taxes, which is 1125, and the answer is 8375, which is answer D. What is the amount of net capital spending? Net capital spending equal to the ending net fixed assets minus beginning net fixed assets and plus depreciation. So the ending net fixed assets is, look at the balance sheet, 12,800, and beginning is 10,900. So equal to 12,800, okay, minus 10,900 plus depreciation, which is 1,600, okay, and this is equal to 3,500. Okay, what is this? What is a change in net working capital? So what it is equal to ending net working capital minus beginning, okay, beginning net working capital. So ending net working capital is current assets at the end, which is 10,000, minus current liability at the at the end, which is 2,100, okay, minus beginning net working capital, which is 11 plus 39 plus 56, okay, 1100 plus 3900 plus 5600 minus the current liability at the beginning of the year, which is 3,000, okay, and the answer, the total answer is equal to 300. Okay, the changes in net working capital is 300. What is the cash flow to creditors? Equal to the interest rate paid, okay, minus net new borrowings. So interest rate paid is equal to 400. Net new borrowings equal to, okay, minus net new borrowing equal to ending long-term debt, which is 7,300, minus beginning long-term debt, which is 6,800. Okay, and the whole thing is equal to negative 100. Negative 100 means it is outflow to creditors. The creditors have net outflow. Okay, what is the cash flow to stockholders? It is equal to dividends, okay, dividends minus net new equity raised. So dividends equal to 63.75. okay, you can see dividends we calculated as 63.75, okay, minus 1,500, okay. Dividend we calculated before is not, okay, we calculated in the previous question, equal to 48.75, okay. Dividends equal to 48.75 minus net new equity raised, which is the ending common stock minus beginning common stock. How much is the ending common stock? It is equal to 9,000 minus 8,800, okay, equal to 9,000 minus 8,800, and the answer is equal to 46.75. Okay. Number 11, what is the amount of shareholders' equity? If you are given common stock $100, paid in surplus $300, total liabilities of $400, current assets $400, and fixed assets $600. So you have current assets $400 over here, fixed assets $600. The total amount is $1,000. On the liabilities, you have total liabilities. Okay, liabilities. You have 400. Okay, you have common stock and paid in surplus. Okay, paid in surplus equal to 100 plus 300 equal to 400. Okay, so now the total liabilities and common stock is only 800, so something is missing. It has to be retained earnings, so therefore retained earnings has to be equal to $200. So the total of the liabilities and equity is exactly equal to $1,000. So the question is asking you what is the amount of shareholders' equity. It is equal to 400. Okay, common stock 400 plus paid in surplus, common stock and paid in surplus is 400 plus retained earnings is 200. Okay, so the shareholders' equity is $600. So the answer is C. Okay, $600. Now, last question. Number 12. Okay, you have operating OCF equal to 218. You have depreciation equal to 45. You have interest equal to 35. Okay, a net total of $69 was paid on long-term debt. The firm spent $180 on fixed assets and increased net working capital by $38. What is the amount of cash flow to stockholders? So you can see that first CFFA equal to OCF minus net capital spending minus changes in net working capital. So OCF equal to 218 minus net capital spending, which is how much the firm spent on fixed assets, which is 180, minus how much the firm spent on net working capital, which is $38. So this is exactly equal to 0. Okay, cash flow from assets is 0. And then you should be able to calculate cash flow to creditors, equal to the interest paid, minus net new borrowings. The interest rate paid over here is $35 minus net new borrowings. Now, the firm did not borrow any new long-term debt, and not only that, the firm was able to pay back $69 for the principal. So net new borrowings is basically negative $69. Okay, so cash flow to creditors is equal to 35 minus negative 69 and equal to 104. Okay, and we know that the cash flow identity CFFA equal to cash flow to creditors plus the cash flows to stock holders. So CFFA we calculated before is 0. The cash flow to creditors is 104. So therefore the cash flow to stockholder has to be exactly negative 104. Okay, because CFFA is 0. Alright, the questions are very simple, but because we don't have class, I just want to go over some sample questions for you, so you understand more about the material. Okay, so any question, let me know, send me an email. Okay, and I will see you next week. Thank you very much.